Okay, we'll go ahead and get started. All right, I hope everyone's doing okay. I want to go ahead and just get this live stream in while I had a chance to do that and go through any questions anyone may have out there. So we saw had a really big sell-off this on Friday. Really take it on the personality of a third wave down. So that's consistent with the labeling you see here. You still have to be careful of a flat where it whipsaws back up. We saw that a lot in 2022 during that bear market. So you still have to respect the potential flat scenario. So just understand that that can happen. And there's no guarantee though. So trading here is kind of like guessing, chasing. You don't want to, like, typically it's not good to just chase because of that setup. You could set yourself up for that whipsaw. So just understand that, and typically that could happen right around the 236 extension. Now, we did get rejected, like a classic rejection here. What was interesting is the market was not able to make that fifth wave. It literally came 2 ticks away from making it. So that's how technical this market is. It just couldn't do it. We're below the neckline of this double top area of the Dow Jones, essentially a double top that broke the neckline and retested, got rejected at the weekly time frame. The triple Qs has broken the 2022 channel since the 2022 lows. Again, it got rejected on the weekly. The SPY also closed under a massive area of support here. It maintained it, but then closed below it, very bearish. This acted as major resistance, and now we're right back below it. Okay, IWM starting to break down. Have not taken the low out yet in the IWM, so we could still see again a bigger bounce in two potentially. So you don't want to be like super uber bearish, but it doesn't look good, right? It doesn't look good if you're bullish, right? If you believe the markets are going to have some spectacular blow off top, or it doesn't look good that it's going to go to new all-time high. Like, it doesn't. This is not what you want to see. This is not the type of price action you want to see. This is wave 3 personality. This is the perma bear personality. This is the chart the bears want to see, and they are seeing it. So you have to give it to them that they may have got the peak right, finally. But I do believe that we're in a 4 wave on most of the indices. I think the technology index may have peaked in the grand super cycle, but we'll know that in hindsight. I think right now you just kind of trade the levels. At some point you go too low, and then it's obvious that the grand super cycle's over. But if once we break this low, we really open the door up for much lower levels, and then I think people will start. You'll start hearing in, the mainstream, news that the technology is peaked in a major cycle top. But by then it'd be too late if you just bought at this peak or held or haven't sold yet. A lot of people, someone I know that lost all their money in the 2000 technology cycle bust, basically sold at the lows because they just couldn't lose any more money. They had to sell because they saw their account balance essentially go down so much. They're like, I just can't take it, and they sold, and they never came back to the stock market to this day again. And that could happen in this cycle, because a lot of people have been taught to just hold, because the market always goes higher. But sometimes the market will go higher, but sometimes it will test your patience and your conviction, as well as your personal situation where you may need the money. You may be forced to take it out. What if we come down here and unemployment is through the roof? You have no job and you're forced to sell your 401k and liquidate it just to live on the worst possible time, right? But some people have to have that happen. So I'm just telling you guys, like, why buy and hold doesn't work for most people, because they either need the money to live on, they can't take the pain anymore because they saw their balance. They feel like they're idiots, and why the hell would I hold it? And and other people, just panic. So I think I'm just telling you guys what again. I was saying this earlier. We're on the edge of a cliff looking down. I started my channel February 2nd. Where were we trading on February 2nd? Right around here. My first target for the technology was actually at the 480s, 490s, and people thought that was so stupid. They made fun of me and thought I would be, as a joke. We're below that now. So again, I'm a weatherman. I'm telling you, a tornado is on the radar. You want to prepare, right? You want to maybe take shelter, maybe get in your storm shelter, build. Maybe you don't have food down there. You get some food, get your water ready. That's what I'm telling you. You don't shoot the weatherman. You don't make fun of the weatherman. You don't want to go kill the weather. I mean, people even want to say death threats. They want to kill the weatherman. You don't kill the guy telling you a storm's coming. So if you are listening to me and have that emotion right now that you need to humiliate Elliott Wave Sage or get angry or send me a death threat DM, you have too much money in the market. You're too levered up. You may be at risk of a mental health breakdown. And I worry about your health and your family's health. Because if that's your real reaction, you have too much. You're not prepared. You have to prepare. So if someone says to you, yeah, the market's going to go down to 380 tech, even maybe lower, you should be like, cool, that's great. I'll buy more. I'm prepared. I have cash ready to go. I have some puts. I have long volatility. Let it happen. Let's go. That's how you should be like. That's how your mind should be like. It shouldn't be like, holy shit, I want to kill the weatherman for giving me such bad information or such bad news, right? All right, guys, got the super chats coming in. Let's go to your super chats, and we'll go from there. So DRI, let's take a look at DRI. DRI. Darden Restaurants. Yeah, some restaurant stocks were doing okay. Some aren't, obviously, but some are. Some are holding up pretty good. Some are up doing pretty good. DRI, Darden Restaurants, at all-time highs, it looks like. So right when you look at it, you see all this bearish divergence. So the first thing that comes to mind is this whole thing a massive extended fifth wave? Highly unlikely, right? This looks like the full cycle right there, 1, 2, right? That looks like a 1, 2. Right? And then it looks like you have another 1, 2 here. 1, 2 here. 1, 2 here. So in hindsight, people would have labeled this again. Would have said, oh, this is a 1, 2, 3, 4, 5. I'm going to short this. There's bearish divergence. Oh, shit. That's why we don't divergence trade. And I believe a lot of divergence traders have a significant problem coming up in a wave 3. Because as you see here, there's a lot of divergences supporting the market, bullish divergence. And a true wave 3, those will get erased. All those divergences will be erased and obliterated in a blink of an eye. And DRI is showing you what happens in the opposite, right? This is why divergence trading is risky business at the higher time frames. Okay, it's risky business because it very easily can backfire. Because the Elliott wave practitioner and divergence trader would have said, oh, look, it's a wave 5 right there. I'm going, it's wave 5. Whole shit. Just short this thing. Oh no. Oh no. So this is a great stock to teach that lesson of why divergence trading it could be so devastating when you get it wrong. Right? because this, you could have labeled this as a 1, 2, 3, 4, 5. With divergence trading, you would have put your whole stack, you would have went short max leverage and just got blown up. So that's a good lesson. But right now, this stock is entering a bigger uptrend, right? It looks like people like to go out to eat right now, and we are seeing the food stocks do okay. But like all good things, it looks like that first wave is over. We did take out all the peaks there and there, so I think that would be our first wave 3 finishing up. And now you've got a series of 4s and 5s that have to play out. So you've got these series of 4s and 5s. They're going to have to play out. But I would say it continues to grind higher. It continues to grind higher. But it looks like you're going to have a pullback coming at any moment. Well, it makes sense, right? Look where the market's trading. It may have already topped. If it did, it could come all the way back down to 178. Correcting the whole thing. Okay, good luck on that. Good luck on that, guys. Let's see, Rio. So the problem I have with the miners, and I still have a problem, guys, with the miners. Maybe gold miners is the only exception, but the XME is a nice basket of household name miners. It's got a lower low sequence here. This should go lower. This is coming to this area. If this happens, and I guess it could still whipsaw back up, but if this happens, like it should continue to go lower, the Rios and the Freeport Macromans should all get, they're going down. They're all going down. Okay, they're all going down. Now, if this doesn't happen and we whipsaw back up, that will be temporary relief, but then you'll still get the drop later. Okay, now Rio Tinto is kind of caught up in that. This kind of situation. Bigger picture, on the monthly time frame, you have a massive peak here, a little blow off top, a cycle, and you have another peak with divergence. And if you look, you're right on the edge of the trend line, a typical fifth wave. So my guess is this cycle from 2009 is almost over. The XME cycle is almost over from 2015, or is over. The XME cycle, this cycle in XME is over, this leg. Now, I'm not sure where we go from here on the XME. I was just playing around, but basically, this leg is over. This leg is done. Okay. So you're correct in a major cycle. A major cycle. So is this the time to FOMO in all these miners? Hell no. Hell no. And that's why in the elite group, we're not like all juiced up on miners, guys, because we have to respect these charts. We can't just be oblivious and be permabulls, right? I mean, this looks like a classic 5 waves up. Look at the wave 3 extension, the overlap in nature, wave 5, the broken trend line. It just has all the right look to it. So Rio Tinto is kind of got the same thing. It's correcting this whole leg soon, if it hasn't already. But the good thing I see here is it may be a sideways correction and not a crash correction. But let's look at where we are with it currently. Let's take a look. So just like everything, 1, 2, 3, 4, 5. Very yeah, it looks like it's peaked out just like the XME, but it hasn't. No one in the market has realized it yet. Now the question is this 3 or not, or is this going to be another 1, 2? And that's the picture on the XME I don't have. I don't think This is a higher degree 3. My guess, my guess is it's another 1-2. This one I can't tell you for sure it's a 3. I think it's going to correct this cycle. It's going to correct this cycle, and then it's going to be another 1-2. That's what I think. And then you're going to get massive gains. So what could happen right now is a rotation. As this goes lower, smart money is rotated into these sectors, and they're coming out of technology because they're getting ready for this phase of the market when all that growth and all that building and all that investment is supposed to hit, and is supposed to come out, right? But right now they're getting prepared. So I think it's going to be a 2-wave, and I would only look for like one more swing down even, and then I believe it could be a rocket fuel, and this is what you want to be in. This is the shit you want to be in the next several years, right? Not the Amazons and Metas and all that. So there you go. So that would be about $50, $46 somewhere in this area. And then it's a 1-2, 1-2, 1-2, and it's off to the races. The miners are going to be the new growth stocks for the time being. And the XME will probably do the same thing. And again, this could be a 1-2, 1-2 here and come out as well, and not what I have here. So again, I'm just looking at this leg. To me, this leg is done. And it looks like 5. This looks like 5, right? A 5th wave looks almost always like this. So it has the right look of a 5th wave as well. So I think this is what we go with for Rio Tinto. I do believe this is the count that I'd like to see. But since it is a 2, I guess there's no guarantee it stops here. I mean, I guess theoretically could go lower, but I think this is the likely area, and then there's more upside for wave 3. Okay, Celsius. Let's take a look at Celsius again. Problem with Celsius is Pepsi got hit with some news that they're going to not allow food stamps to be used, and this is tied to Pepsi a little bit because I think Pepsi's a big investor in Celsius. So unfortunately, it kind of trades with that sometimes. But anyway, so if this is the count, you should have more upside, right? You broke this high, right? Now, it could be this. That would be very bearish. But you see too much divergence. That's not what you want to see in the wave 3. So it's probably going higher. It's probably going higher. Maybe that. So he said too many possibilities, but could have a buy set up. That could have been a buy on Friday, like we saw on Friday with this little dip here. So Friday may have given you an entry into this if you wanted to try to play this. But unfortunately, I still think it's just a connector wave that will fail at some point. But it could go much higher. It can go really high even. It could really, so there's no reason to worry about that. You should just buy the level and hold. I'd rather buy a bigger pullback, but you may not get it. And this was too risky to buy this because this could have been, this could have easily broke the low. So now that we've broken this high, we want to be aggressive. Now I would prefer a deeper pullback than this, but you can do what's best for you. Because if we get this 5 and we can get a deeper pullback, that's when that's when I'll get more interested in it, on something like that. That would interest me more. That kind of buying this and foregoing this little bit, because this could be just a little bit here, and then it could have another big decline. The best case is it's another 1-2 and you get lucky and it just moons. but those are rare setups. Okay. All right. Indo and gold. So Indo's like I said, it's all about the energy cycle, and I still think the energy cycle uh, is going to go higher for the short term here, and kind of updated this chart a little bit. This is the bullish interpretation of the energy trade. 5 down with an A, and then a big like W, X consolidation, and then a Y. So if Y plays out, this typically means energy stocks rise, the market goes down, then the interest rates rise. It's inflation. This is the inflation trade, right? The stagflation. This is the 2022 scenario. And then this is the, oh shit, what did we do? The whole, everything comes to an end. But the problem is we don't know how long this is going to take to play out. This could take years. Something I was showing my basic members today in our weekend video is the energy cycle in the connector can last a long time. Look at this consolidation here. Before you got the move lower, it stayed in this range for years. This could stay doing this for years before you get this low. Okay, I just don't know. This could be like this chart could be like this for all we know. So my point is if as long as the energy trade is above this 60, I would say this low here. This low here. $63, $62 oil. If we're above that, I think the energy trade is going to continue to be profitable, make money, and be okay. I think you got to watch that. Now, if we lose that level, you need to get out of the energy trades. And that's what Indo's tied to, guys. Indo's tied to that. So if you trade in Indo, you got to watch the oil market, and you got to understand what the oil's doing. If you're ignoring that, then you're gonna lose. So I think what Indo is telling us is we're getting a breakout, but it's not happening straight line. Remember, left shoulder, head, we're in the right shoulder. So now this is the label. Is energy going to break out next week? Is energy going to break out next week? That's what this chart is saying. That's what the oil chart is saying. Energy breaks out next week. Obviously, if Indo breaks 266, it's likely to break 249, and the energy trade probably is collapsing, and the chart has to go back to what we had, earlier in the week. So a big moment, and again, I think we're seeing a rotation into those kinds of stocks. The stocks that I think the market feels, is the stagflation winners or the inflationary winners, because whether tariffs are inflation or deflationary, the market believes they're inflationary, so they're going to trade as it is until the news is right in their face it isn't, and then they'll panic out of those trades. So right now, smart money and the talking heads on CNBC all believe the tariffs are inflationary. The Fed is saying stagflation openly now, and they've been saying that for weeks. So if you're just managing these huge funds and you have all these clients, what are you going to have to do? You're going to position them into these areas that are going to profit from that setup. And that's what's happening right now. That's why tech is weak. They're getting out of tech. They're selling tech to get into these other areas that they feel could weather those scenarios: inflation, stagflation, and tariff-proof businesses. And that's what's happening. That's what's happening. And that will continue to happen until the data is in their face and says it's not, with either a massive negative GDP growth, a negative CPI reading, and then you'll see that it will reverse and panic. But until then, I think that's where the money is going right now, is into those trades. And it's been going on. That's why the market's been going down this week. Why is it my Amazon going up? I bought all these calls on Amazon because some dude on the internet said to buy them, and it isn't going up. Why? Why? But this is why. This is why it's not happening. Because the big money is preparing for something different. Warren Buffett prepared more for energy, right? So maybe he was ahead of all of us, right? He sold his SPY fund. He's not even in the index fund anymore, guys. You guys really think you're outsmarting him? There's a reason these guys are dumping. These guys have got hundreds of people that work for them, thousands of people, analysts. This is what they're telling them to do with their money. Okay, so, and we're seeing it play out. We're seeing it play out right now. Uh, GLD, gold. So gold is just continuing to go higher, right? So gold was one that we need to acknowledge. Again, this is a stagflationary trade. Gold does well. Commodity, these precious metals runs in wave threes of their super cycles during stagflation, inflation situations. So money's going into it. It could be hitting a blow off top for this cycle. We almost took this peak out, and we still might. If we take that peak out, gold this will be a 1-2, 1-2. It's just going to keep going. It's just going to keep going. So GLD is just going to continue higher. I mean, it's just going to keep going. And I think the real 3,400 is where I think the cycle ends and consolidates before 5. But as you can see, there's a lot more 4s and 5s yet to come in the gold cycle, because it's a race and divergence, guys. It's that's how much momentum people are now panicking into this trade. But that's what blow off tops are. That's what commodities do. People panic into these out of fear, right? And gold is got a little bit of an industrial metal purpose as well. So I would say, I don't know how high it's going to go, because commodities can really get going, but I believe it's going to go higher right now. And there's really, if this is the count, we should have 5 should be done. So this cycle should be over, and we should correct back down and then continue higher. And the GLD just follows that pattern. And I just don't have the GLD labeled, but it's literally the same. It's the same labeling as you see here. Okay, BNGO. Let's see. Let's take a look at that. All right. Again, I don't want any biotechs that are small, none, until the XBI is at a low. There's no reason to buy it. So your question is, how do I see the chart now? I mean, honestly, you can't. I'm not sure. It looks like it reverse split on us. So you can't buy this until the XBI is, and I'll show you. You just need to just ignore it, because it's just going to be a carrot on a stick while you see it go lower. When the XBI is here, you should take note. You should take note that maybe you'll get at least a pump. You may not get the low, but you'll get a pump. But until that happens, it's just going to keep going lower. I think it's just going to keep going lower. So here you have, let's see, a 1, 2, 3, 4, 5. So 1, 2. Again, we'll just kind of label this and see where it's going. A 1, 2, and you're in 3. Okay, so you're in 3, and a 1, 2, a 3, 4, 5. Now you see all that hasn't taken that peak out, so chances are that it's not in wave 3 yet. It's still in. It's about to get the 3 of 3 separation. To erase all that divergence in this leg. But clearly that bounce corrected this whole cycle, and then you broke the low. So it's extending. It's getting more bearish, more dire. And then again, you can come back and you can try to label the whole thing. And it just doesn't look good, right? It's a go to zero stock. I mean, this is just a go. Look, there's no reason to think it's going to do anything but go to zero. But I would say that maybe that's the major peak we could go from. Let's see where we are from the major peak. Let's take a look. Maybe put that there. I could see that being 5 there. Yeah. And you see, you're taking the divergence out of a wave 3. So from the major peak, you have a 1, 2, and you're still in 3, 4, 5. So what you're hoping for is this 4 wave, if you're going to buy it. But you'll have to time it just perfect. And I think you have to time that with the XPI and possibly even the Russell. But it obviously looks like it's going to have more downside. I would just say short at will. This is just a slam dunk short trade. Slam dunk. You know, but I think the 3 will end and you'll get a pump. You will get a pump. You'll get a pump. And then it should make a whole nother leg lower, or it becomes another 1, 2, and it continues to go down into the abyss. So something like this is what I'm seeing now play out. Again, the market is bearish. Small caps not doing well. And that's the thing. Small caps aren't doing well. So basically, the little symbols, you guys trade these little symbols, you need to kind of forget about those unless you're going to short them. I mean, I'm just telling you, the little stocks, the penny stocks, all that shit is going to be really tough to trade if the Russell is going down, if the ship is sinking, if the Titanic is taking on water and sinking. The Titanic could be sinking, guys. You don't want to own those stocks. You don't want to trade them. You have to get that out of your mind. Go trade what's working. What did I just tell you what's working? Energy. Go find the small cap energy stocks to trade. Okay, that's what you want to search up. Now, this is the Titanic sinking, guys. This ship is, if this plays out, the Titanic is sinking. Okay. This peak, you can go back and watch my video on YouTube around the 25th. I think I called the peak the day this happened. And I said this could have been the most important day no one would realize. And it's looking to be that way. But again, the permeable chart still has new highs. But I would say that the ship is sinking right before your eyes. But once we take this low out, it'll be very, very dramatic selling in small caps, I think. Okay. FSLY. Again, it's another kind of tech stock, and we just don't want to own those right now. You just don't want to own those. So let's take a look at where we are. So again, you made 5 waves down from this low, from this peak, right? We have 5 from the peak, and then you had a little bounce, It's not the connector, so it's still wave 5. So it could still be in wave 5. It's likely still in wave 5. If we take out 560, which seems pretty likely, you know, we may head to this target that I have here. Something like that. And again, we've avoided trading this. So I think it's likely to break this low. Maybe find the bottom right in that area. But remember, it is a go to zero. Look at Wolf, the stock Wolf. When you start breaking these kind of pivots like this, when I say it can go to zero, I mean it can go to zero. It can like go out of business. Like you lose all your money. Like game over. So there's so many other things to trade, to buy if you're buying it. Now, if you're selling it, it's probably too late. It's too late to try to sell it. But to me, this is just something on the sidelines. But you need to understand the risk of trying to bottom fish this. Go look at Wolf Speed. I gave the same warning on Wolf Speed. I saw it yesterday, like down like 50% in one day. That's what can happen to Fastly. Don't fool yourself. It could just go. It could literally go to zero. When I say go to zero, it can go to zero. Like I'm not joking. You could lose in one day 50% of your money Wake up. That's what happened to the wolf investors. But if you listen to my warning on wolf, you would have avoided that catastrophe. This is a similar setup as I saw in wolf speed. Okay, good luck on that. Uh, yeah, Papa John's. If the food stocks are doing okay, then maybe Papa John's is coming out of its correction. So we are in this A, B, C pattern. I've been tracing out the impulse. Now the 5 could be finished here, or we could extend in 5. We didn't quite hit our levels, so it could still be in 5. Yeah, see, we didn't bounce strong enough to end the correction. Since our levels haven't been hit, I believe it will make new lows, and then be in a major bottom. So I'm still looking for this area to get tagged. The sweet spot is the darker colored box, and we pretty much avoided buying this until these levels are hit. And I think with that kind of rejection, and I think this is likely the path that we're going to see. Chart support, let's take a look if we have any chart support. I mean, that's pretty low. I don't know. I don't think it's going to go down that far. That's the bottom end of our range. Maybe in a panic wick it could do that, but not a lot of chart support, so it's going to be a tricky one. It's going to be a tricky one. I think when this low breaks, a lot of trap buyers are going to get blown up, and they're going to panic out of it. Because I think a lot of people bought it here thinking it was the low. Of course, we avoided that, and I believe all those people will panic here. Okay. GDX. Again, the miners are tricky, like I showed you, the XME and all those others, and this is no exception. I'm still looking at this as my chart, my primary chart. There's no reason to change this until we can get a 4 and a 5. We don't have it. In fact, we got a nice rejection from the short area here. I don't like the miners. Why are the think about it. Why are the miners struggling, but gold's going up? Why? And I wondered that too, right? I always wondered that too. Like, why are the miners struggling? Well, the miners are struggling because in inflationary environment, a stagflation inflationary environment, their profit margins are going to be squeezed because commodities are going to go higher and interest rates are going to rise. It's the same problem. So you want to be in the metal, not the miners. That's the bad formula. What you need is high metal prices with deflation, with commodities and oil going down, which is kind of what we had here, but that may be about the reverse. If the energy trade is going to come back and oil is going to go higher, their input costs are going to rise and they're going to be less profitable. And I think that's what this is predicting. While the metal could still go higher in puzzle investors. And of course, the metal could also correct as well from its high. But that's what I think. I still think this is going to happen. I still think this is going to happen. All right. Now, if we can either extend past 50.52, or we can make a 4 and a 5, then of course that's negated. We put the 2 there, and it's going to moon. But we got plenty of time to get in on that. So I think this is the count. Now, some people also have this as the count. I'll put this as another count like this, where you'll get a 4 and a 5, and it finishes a 5, and then you still get a big pullback. That's also a possibility, but I don't think the RSI supports that view, based on what I see. So I had it in almost a more bullish setup, where we haven't seen a 3 yet, but we see this cycle do something like this. That's what I'm thinking right now. Okay, but if we make a 4 and a 5, then the bottom's in, and it's going to go higher, and it will do well. These will do well, but ultimately in the future, it is going to be okay, I think, because more than likely the metal price will start to go higher and make up for whatever increase in commodity costs they're going to see. That's what this chart probably is saying. So what this is also saying is gold and silver are going to be where you want to be in the next 3 or 4 years. Not. You know what I mean? So, but this is kind of what I'm thinking right now. All right. Okay. Thanks. Let's go to the next group. CMG. It's close to our buy area. Again, food stocks seem to be doing a little better. Maybe investors view those as safe haven trades. So CMG is almost at our buy at 45.52. One more swing lower, and we're patiently waiting, perhaps for a big opportunity in a 1-2 setup. Perhaps even this could be a grand super cycle top, but that's the setup on CMG. Kava's tricky. I think Kava's got some overvaluation issues. Part of their situation, their I think price to earnings or price is like ridiculous. But the count right now that I'm going with, it looks like you have 5 off the low, and you're correct in that in this 2-wave. So I think we go with this count for now until proven otherwise, and we come out of this. Now the problem I have is how it bottomed here. I could easily, and this is why I don't want to buy it personally, is I could put a C here, and this is kind of where we had it originally, and then we had this A, we have an A, B, C, and this is a connector. So we really need to watch how it behaves in this area. Now, if we could take out 94, then it's the 2's in. Now, if it starts to really plummet early next week, then it's a connector, and it's going to take a whole nother leg lower and shock investors as they get blown up and lose all their gains. It would still be within it would still be within this leg. So it would just be 1, 2, 3. So well, I have this as 5. So maybe the best way to label it then would be something like this. Again, this is the bearish label, and then it's Y, and then this was just an A, B, C, or another W, X, Y, and it goes lower. So this box is not valid anymore if it breaks these lows. So if it breaks this $73, it's gonna take, Y will extend. It will extend down and probably revisit its IPO lows. So it's got to hold this as a do or die moment for this. So this is the bearish view of the chart, and you could talk yourself into it. Look, 1, 2, 3, 1, 2, 3. You could talk yourself into it. So very bearish, but that to me that's like more of a perma bear chart. I think the right call right now is to label it the way we had it earlier, but be on the sidelines, not trade it. So that's what we're doing. Our elite members, we're just not trading this anymore, and we'll just let the market give us some more data, and then we can decide what we want to do here with Kava. Okay, but I can't say. I think it's 50-50 whether the 2 is in or not. I think in a couple more days we'll know. Wing unfortunately shows, I think, more downside is coming, and it's the one that I don't want to buy either. So Wing unfortunately has more downside, and I believe Wing's going to go lower. The reason this bounce should fail, if I look at it right, is too much bullish divergence. You see this? We need to take this out. So we haven't done that. That 4-hour needs to take that out. Okay, the daily needs to take that out. So you haven't seen the wave 3 of the 3 yet. So I would be very careful long wing stop. Very, very careful. Looks like a 1, 2, 3, 4, 5, A, B, C. It could be finished right there. It could actually be an amazing short opportunity right here, right now. Looking at this structure, it's a flat, maybe 3. Let's look at the 45-minute. Now it looks like 5 down. So we put the 1 here. So we put the connector somewhere here, or maybe it's 5 waves up. So maybe a 2 could go up a little bit higher. and then it could be a short opportunity. This is the connector. So maybe something like this. Maybe something like that is what I'm thinking. If it does just dump from here, then this was an ABC flat, and to me it looks like five. This looks like a impulse, like an end in diagonal there. It doesn't look like a three-wave structure, but so I think something like this is possible. And then I think there's more downside. Okay. All right. Let's see this next one. EMPFY or YF. Okay, you're coming off of a accumulation here. You have, so we'll call this the low. Looks like 1, 2. Looks like again in 3 and 3. This could be 5 up. Yeah, see, it's 5 up. So so this could be an A, B, C. So this could be a lot of things here. Unfortunately, that's the low off of this. It looks like that's the peak. So if it's this, the top is in, right? The top's in. It did push the level, so I think that's probably not the way I would label it. See that? Yeah. So I would think we label it from this low. And we have to label it like 1, 2, 3, 4, 5. And then it should pull back and make another swing higher. Something like that is what I'm thinking. Now, it could also be a 1, 2, 1, 2. And if it is, it's just going to go vertical. So you're going to have to do what's best for you. I think more upside is likely. I'm looking at it. I see the peak in 3 here, and I see a 5. I see bearish divergence. So I would be careful. It's not in a fifth wave. But if it's a fifth wave, it could come all the way back down to this 20-cent area and then find support. We just... yeah, it could be in a fifth wave right here. Maybe one more high. And then you could have a dramatic sell-off. So I don't know. I'm just going to label it this way. I can't rule out the 1, 2, 1, 2 setup, but this is probably what you're looking at, and then you'll get something like that. That's what I'm thinking. Okay, good luck on that. Yeah, can you show some charts like multi-year moves, not just short term? Yeah, just when you ask, just make it clear if that's something you're interested in. I only show those if it's relevant to the conversation or not, but if you're interested in that, you could just put that in the comments and I'll go back and do that. Okay. Let's see here. Yeah, look at that. Hit the buy area. Yep, looks good. Now you just have to buy it. Now, again, a lot of people want instant gratification. Oh, it's just going to do this. It may not. It could still grind a little lower. It could come out of this, but that's the area. That's the area. The rebound isn't big enough yet to say like it's not big enough yet. So it could still go lower and still be a buy. When you have these boxes, it could go into the box. That's why you can't just put your whole stack in right here because it could go lower. Sometimes it works perfect. You get it right where you need it, and that was it, and it's over. Sometimes it doesn't. Right now, the bounce isn't big enough. It isn't big enough to say the whole decline's over. But it erased divergence and everything. So far it looks good, but if you can get some follow through next week, back up here, then the low's in. And you essentially got it at the low, a zero risk position. And you can just hold and let the market decide for you. Are you going to get this, or is it going to double correct, and you'll have to get out of it? Okay. Live person. Again, we mentioned it would go lower, and that's what's playing out. So we'll just kind of update our chart here. Looks like you're in 3 of 5, and again, if you erase divergence, that would be devastating to the bull case. Hard to say. I'm not sure what's going on there. We'll just do this. All right, so you see how that erased divergence there? Not on the 45 though. But I mean, not on the 4-hour, but it did on the 45. That's a warning sign that it's probably gonna accelerate lower, and then this was a 1-2, 1-2. If that's the case, this could push even lower. So I would be very afraid that this isn't the count anymore. You don't have confirmation yet, but I would. This is why divergence trading is never 100%, right? And you shouldn't use it all the time. This is probably what it's morphing into right now, something like this. So I think there's more downside coming, and it's got to hold this low. We'll have to just let this continue to play out. So more downside. Thoughts on the bottom? I would be nervous. This is a little bit of hope, but the 45-minute momentum tells you there's likely another gap down and lower coming, which would then take out the 4-hour and daily, and then this will just extend. You'll get a boom. So if I was trading this and I saw that, I'd be out of it. I mean, I would not want a long position anywhere near that kind of situation, right? Remember, think about it. All the trap buyers that bought here, they're all going to panic sell. They're pushing the price down. Okay, then GER, still we have our level and we just have to wait for it. We don't on our channel FOMO into anything. We wait, and we sometimes have to wait over a year. I'll talk about a stock for over a year, and this is no different. So we're going to patiently wait and let this play out. Now, this could still be in B. We could still whipsaw around, right? There's still possible, but we don't trade. I don't trade the middle area. I don't recommend trading the middle area. This was the short area. It proved to be the right call. Now this is kind of a mess, right? What are we going to whipsaw back up or not? It looks like only 3, right? Be careful of be careful that if this is only 3, that it doesn't do the whipsaw. But see, yeah, this is 5 up. I wouldn't buy it. I mean, I totally would not speculate on this. The only other alternative that I can think of, see, there's a little bit of divergence there. So if I wanted to label it this way, I could label it as something like that to make it an impulse. But I don't want to trade it. I don't want to trade it. I don't want to give you hopes that it's going to come back up and be. I think it's better to just ignore this and go trade something else and just wait for your level to get hit. That's the only thing I can think of, because it could easily still be this as well. It could easily be that. So you gotta if you're gonna gamble, buy it here, and maybe it's lucky. But I think you do risk potentially also uh, this situation, here, or two comes back up and then down. So too many ways to label it. To me, I don't want anything to do with it, especially if the market's gonna go lower. Okay. Um, let's see, Commerce Bank here. What's going on with this thing? So we have this 1-2. Obviously, we must have given this update a long time ago. So this looks like the first 3-4, right? So probably was a dip buy on Friday. I bet that was a dip buy on Friday. See, not everything's bearish, guys. It could go a little lower. I would say the level I would be looking for is right here for that wave 4. 2097, 2031, so maybe a little more downside. And then it should continue higher. It should find support and continue higher. But once it makes this fifth wave, then it could have a much bigger decline, right? But because it could either turn into another 1-2, or of course it could make a smaller degree and grind higher. So the meat of the move is probably over. Let's take a look. Yeah, I mean, I think you still got more upside. I think you still have more upside. I'd like to buy I would like to buy this here because looking at this structure, I wonder if you really even seen the wave 3. This could be a 1-2, 1-2 setup. This may not be 3. So, good luck on that. All right, let's take a look at KURL. All right. Whoops, what happened? One, two, three. So yeah, you're trading in a connector wave, but the connector wave took this high out. Uh, I think it could be a very dangerous. Like if you shorted that, you did well, but I think it could potentially backfire, because you have this 3, and to me, by breaking that high, you need another swing higher. You need another swing higher because this didn't take out the divergence. So very dangerous setup, but yeah, why don't we label it like this? So maybe you'll get lucky like that, and then you get the next push higher. I don't like to trade the connector wave, especially when they look like this. This is probably some kind of ABC for W, X, and then Y, and then another pump. So yeah, maybe you could still get some more downside if you're lucky, and take this peak out, take that peak out, and then it rips back up. And then either it goes down even lower, or you bottom out. So I think this is what you look for. I don't think it's an impulse. Like, I wouldn't call this a 1, 2, 3, 4, 5. But I think this is what I'd be looking for. No, I don't want to long uranium until this condition is met. URA. So URA, our elite members have been following it. We have not FOMO'd in on it. We saw the rejection area, and it's sure enough been a straight line down. We're not looking to buy anything uranium related until we're in this box. So watch the URA. When the URA is trading around $21, then pick your favorite uranium stock. That might be the time to buy it. No guarantee. There's no guarantee here, but it's kind of likely area. So more than likely, anything uranium related is probably going to struggle until till that ETF finds a low. UROY. I see 5 up, right? 1, 2. Well, that looks like 1, 2, 3, 4, 5. So maybe that's the 3, 4. So like 1, 2, 3, 4, 5. Yeah, that's it. So we had a big extended fifth wave that we've lost the whole fifth wave, which is typical, right? Which is typical. And then you have 3 and 3 and 3. One more. Just like I said, you are at just one more little low. So you're close. You're close, but you're just not quite there yet. 139. But see, you have no chart support. That scares me a little bit. I mean, the area could be, this is the box. So that's your buy box. It's a big area. You don't have chart support until 96 cents. So that's pretty big capitulation. But looking at it, 3, 3. Yeah, I think it's gonna go another 3 swings lower. So from the daily standpoint, you came down and corrected that, right? And this is what kind of fooled everyone, because we thought this was the low, but it wasn't. Right, it wasn't. Unfortunately, it just didn't work out that way. And now we're down in Y. And now you have another W. I guess as of now, I'll just label it this way. The labeling, it can change. And then this turned into some kind of ABC. So yeah, it's close. I think it's close, but just not quite there yet. So that's the look. So there's your area. It could be a major low on the grand super cycle, and somewhere around there. Beam, CIFR. All right, so this one broke a low. It's a go to zero play. It looks corrective, right? So we need to see a 3 swing move down. Looks like you have a B, and then a C. So there's your first W. So there's your first connector right there. We'll check the RSI real quick to see. Yeah, well, maybe we'll change it to an ABC. We'll change it to an ABC here. And some kind of like 5 waves down from here. 1, 2, 3, 4, 5, A, 1, 1, 2, 3, 4, 5. So actually it is a WXY. It's just a triangle, ended in a triangle. So now we need 1, 2, 3, 4. So the first A and Y should be coming to an end soon. You should get B and C. So the first A should be coming to an end pretty soon. But you see how you're erasing divergence? You don't want to see that. So you're still stuck in it. You haven't corrected this site, so you're still on the top. So you still are looking for a 5-wave move down. And you're just not getting it. You're just not getting it. Because it's such a bearish instrument. Right? So all that has to probably play out. All that has to play out. Actually, still probably in that setup. So, yeah, at some point it'll bounce, but you need to start seeing some bullish divergence at the bottom, right? You don't even see that yet. You don't even see the bullish divergence yet. In fact, it's erasing divergence. So as you can see, there is a lot more downside to still come. With bounces here and there. It's when this cycle ends, you'll get a really big bounce, but it's probably only going to take you back up to the wave 4 area, which could be where you're sitting now, and if you're lucky, $7. But then that will fail and go even lower again. All right, and then your other question is CIFR. A minor, how's this one doing? So it looks like our flat is playing out just like we expected. Just like we expected. So now we just need to let this play, let it finish its correction. Looks like you have a big 1-2, right? And now you're in 3. We just kind of have to try to label this the best we can. See, erase divergence again. So this is the right. So that's crazy. So they're really panicking. Wow. Look at all those 1-2s. See, all those dip buyers got blown up. All these 1-2s is dip buyers getting annihilated. All those dip buyers getting annihilated. So as you can see, there's more downside needed. Maybe substantially more downside. If I'm just tracing this out, I get it. Something like that. So the problem is, you see this 2-wave, see how it's a big bounce? You're going to get a big bounce 2 and 4, and then it's still going to fail and make another low, and everyone's going to go crazy when that happens that bought it. So as long as it's above 35 cents, it should be okay. But it's got some pain. It's got some pain as the investors get into the sadness, despair mode phase of this correction. That's what flats do, man. Flats are essentially crashes. So something like this is what I'm thinking. And good luck. It should come out of it. Again, as long as this low holds, it should come out of it and then be okay. GME was so GME bigger picture. I still have it in this bullish 1-2, 1-2, 1-2 setup until the market negates it. If that's the case, we're going to see $19, around $19. So it's in Y. So you can watch out for a three-wave move, right? We need an A, a B, and a C. You could see something like that. Now, the more bearish view is, and then this is not ruled out. If we continue lower next week, the more bearish view on GME is this is a connector wave, and we have to just kind of expand our time horizon. This is the more bearish view, and this was something like A, B, C, D, E, right? And this was a W, X, and we'll get Y. I'll do that. Okay, I'm leaning towards this, guys. It's what the data is, but it hasn't confirmed it yet. But we're on the sidelines now on GME until we get confirmation. So again, this chart I show isn't mean to trade it. It just means, you know, right now this is the potential label, and then after that the market will decide. But the market could decide to do that bigger connector, which would retest these lows at $10, $11. And that's just the way the market is. Market's bearish, right? And obviously, okay. DXY is in a middle area, and I believe the DXY has more downside, but then it should spike higher. I think it's going to spike higher to this final area, something like this, and then lower, bigger picture. It's in a bear flag on the historical chart that should, I think, make one more tag, like 1, 2, 3, connector, 1, 2, 3, and then a massive decline. I mean, because you'll get big 3 legs, you should get a massive decline. So massive dollar devaluation. This is probably where your Bitcoin goes to $1 million. This is where gold goes through the roof. This is probably the end game in terms of the U.S. debt situation. And perhaps it's telling you where the dollar will head in the next 10 to 15 years. But short term, I think this bear flag has got one more swing higher and it needs to finish. It's missing one more swing. Could it do it now? It could. I don't know. I don't think it's going to. I think it's going to be tricky here. It's very tricky to trade this thing. I think it's in a connector wave within a connector wave. So it's really you're just kind of guessing around where it's in trade. It's been very difficult to forecast the dollar index, but it's kind of not been very relevant to our trading. The yen is much more important right now to worry about. So something like that. Okay. CCU, let's take a look at that. Looks like that peak probably is almost done. I don't see a 4-wave yet, so not yet. It's probably got more upside, a little more upside to go. But you should get a 4 and a 5. Something like that. Right. That's what I'm looking for. So more upside, but you need a 4 and a 5. I think this one's pretty straightforward. And in fact, you have several 1-2s here. So probably the first one's over. So you have more upside before the rug pull. All right, that's CCU. Then another set of questions here. Let's take a look at what happened here. So Looks like we tried to have the dip buy here at 37.20 and it truncated on us, never got it. And that's what happens with these really bullish instruments. Sometimes we just don't get our entries filled, and now it's in wave 3 mode, right? So probably something like that. You still have divergence, so more than likely this will be another 1-2. So it definitely something you probably want to buy the dip on. If it can make 3 swings down, the next area to buy it is at 80.41, and that probably won't be a wave 4. Probably be another 1-2 or something else if it does that. But so it's likely not to do it. It's likely to hold that low. But in case it does dip down there, that's the area to pick it back up. And you could relabel this maybe as a 1-2, 1-2. All right. So qubits still in our area of accumulation. Now we broke this low. So now we know this, it's in a connector wave. So wave 3 probably won't come for quite a while. But what we will have is a lot of tradable price action potentially as it makes this A, B, C, this whipsaw. So look for that whipsaw. It looks like it's going to already start to do that here and go higher. But it should fail. It's likely to fail. Perhaps fill this gap and then fail. But it looks like that's the count, man. All right, RGTI. Different picture, not as bullish. I'm not sure why, but the chart is the chart. There's no reason to change this forecast. It looks like it's about to melt down. It could find a low somewhere along this trend line, but it doesn't have to. It needs to make 5 waves down before it could potentially make a low. It looks like, just like the market, it's heading down. No reason to buy that, or I would rather trade that other one, or qubits. ASIP, let's take a look here. This one, this is like a SPAC or something. 5 down, 2 up. So this is bearish price action, right? You have a 1, 2, 3, 4, 5, and then you just have this ABC bounce, right? And now you're going to go lower. But if you look, you're only in 3, so it's a connector. It's a middle area. You could make another swing higher. It could easily start your impulse lower. So it's a kind of like just guessing, but since it's 5 down from here, there's a likelihood it will break lower in 3 swings, at least 3 swings. It's likely to do that. Yeah, tough. It's a kind of a 50-50 coin flip where this one goes. I would say I would be on the sidelines. If you break 279, it should be breaking much lower. If you can come back and take out 692, you'll get a bigger break high. So I think this is a tricky one because it's only in 3. Now it does look like 5 up here, so maybe that's the clue. It's going to go higher, but you erase divergence. So that negates the impulse. So I think you're just better off being on the sidelines on this. Toshi, yeah, how's that one doing? Toshi, let's see here. I thought I had Toshi. Well, maybe it's in my other list. Yeah, there it is. Toshi is in our buy area. Let's take a look. So that's the buy area. But we have 3, connector 3, and do we have another connector? We do. Okay, so you see how this bounce corrected the whole cycle? The daily did not. Okay, interesting. Maybe it's a yeah, see how you draw the line, it comes all the way down. So maybe the best way to label this is in 5 waves instead of the 3 wave structure. No. It needs to be labeled in 3 waves. And 5, it's got to be labeled this way. Let's go back. Let's take a step back and look at this. So we have to put the Y there. So that's the low. This has to hold. 26657 has to hold. It's in the buy area. You had really good capitulation on the daily time frame. Now the correction isn't technically over, so it could still be corrective, but it looks like this part you have 5 waves down right now. So it could do a couple things. It could be in an X wave and do something like that. Do that. It could do that. It could also erase divergence real quick and do this and break this low and then go lower. All these go lower. The surprise would be that it's a flat off of this peak right there. And it goes to new highs and nobody realizes it, and it's something crazy like this. So either way, it's like this is the area it needs to hold. Now if it breaks this low, it could still whipsaw back higher, right? But I believe the long-term chart is damaged if that happens. So for right now, I would just hold it, and if it can erase divergence and keep this low, then that's a good sign. If it could take this divergence out and keep that low, because then you're talking the bottom could create a new bull market. But this is the count I'll go with for this one. Let's see here. R cat. Let's take a look. Red cat Holdings. All right, we had our buy here at 365 off the connector, but you see how it's bouncing already? What that tells me is it's going to turn into an impulse. Oh, it may truncate it. So this means a couple things. The buy box isn't there anymore. But anytime it falls short, what that usually means is the stock rallies too soon. Full capitulation wasn't allowed to happen. Maybe you bounce and then you get another low later. So I think that's how I would label, because that was too big of a truncation. So I believe you're in a connector wave that should fail for another low. You see this a lot in very bullish stocks that really want to come out of this correction. But I think the best way to trade it is to just trade it bullish off that low. So until the market proves otherwise. So I wouldn't ignore it, I would say, but it is trading corrective, right? It only looks like it's 3, and you haven't taken this high back out yet. So I would just watch it and just stay on the sidelines. That actually looks like 5 down here. I mean, this would be the worst case scenario, but I would just sit on the sidelines and let this develop more. If you could come back and take out 636, perhaps you could be more aggressive trying to buy it and play the connector, and go from there. Yeah, because this cycle's over. So this is the connector. If this fails here, if that fails, then this thing is it's like game over. It's like bye bye, right? So I'm not saying that's going to happen, but anything's possible. Okay, Carvana. Carvana is always an interesting one for us because we had followed Carvana on our channel since I started my channel. And that was one I shoot myself for. I was too scared to pull the trigger myself on buying this thing back when we had it. I mean, we had it as a buy all the way back down here, guys. We literally watched the impulse like come down. And I remember telling you guys, I'm like, this is probably the low. We ended the cycle, but shit, I'm not buying this shit, you know. And looking back in hindsight, damn, no one would have known. But it came all the way down, and then we had a safer buy here at 40s, which even that seemed pretty ridiculous. Then it went parabolic, and someone's like, "When do I short it?" And I'm like, "Just wait till the parabola breaks." It broke, and sure enough, it's been correcting ever since. So it's been erratic. It looks like it's a flat. It looks like a flat to me. The question is the flat finished? And if yeah, the flat could be finished. Wow, isn't that crazy? Yeah. Now, we didn't take this peak out. Let's go to the higher time frame. Yeah, no, the weekly we did, the daily we didn't. So it's not a perfect way to end it, but technically speaking, I see an a B, and a C, and I see the C as ended. So the two and the two could be in. As long as you're above 160, the low's in. Now, if it breaks back below, then oh my God, is it going to get annihilated? Because this would be a 1-2 in the flat. Then I would short it. So I wouldn't short it here. I mean, buying it, I'm very skeptical buying it because it's only 3 up. So sidelines, if you break this low, amazing short. If you go higher, the 2's in, and it could be off to the races again for some reason. So you know, I think it's this is a toss-up, but it does show all the signs of a bottom here. We've been kind of following this for a long time. So if it breaks the low, it's this, right? A 1, 2, and it'll go all the way down. So that it only shows 3 up. So maybe it's tilting to the favor of the shorts that it is a C. Yeah, I think MicroStrategy is done. I think that is toast. And MSTZ just truncated. It never did get to the bottom area, but I believe MicroStrategy did get to the what I call the short box, and it got, look at the rejection. So it's likely that's it. As long as MicroStrategy is below 344, there is no reason to have hope or think it's ever coming back above it until it goes lower. There's just no reason to think that. Just stay on the short side of that trade and let this play out more. Okay, that's what I would do if I was in it. Now, I didn't want to take this because there was always a risk it could still extend in the connector, but it's looking more and more likely based on the rejection. It's and the forecast for Bitcoin. It's about to go down again. This could be yeah, I think I had this in 3, and 5 or something like that. Let me see here. Yeah, 5. So yeah, so I think that's the count. Now, if that's the count, MicroStrategy, where does that take us? Where does that take us? And we all know what happens if Bitcoin goes too low, right? Yikes! Basically, they go bust. So if Bitcoin, so this they go bust. So what happens? What happens here is Bitcoin keeps going down, like we have shown here, and they don't survive. They over levered their balance sheet. They don't survive. They're blown up. And that's what happens, guys. You know, as traders, if you try to FOMO in a bear market, you risk blowing your whole enterprise up. And he may have bet the farm on Bitcoin up here, buying it, buying it, buying it, buying it, buying it, and if it goes underwater, he's going to blow up his balance sheet. And I'll have to sell all those Bitcoins, and maybe that's what the whales want. And I think the whales want his Bitcoin. He's a huge target. He's a huge target on his back because they want his Bitcoin, right? He's a huge concentration of Bitcoin that they know he will have to sell and dump it if they can push this price down. So they don't care about him being the spokesman. He don't give a shit or that he's the CEO of Bitcoin. They don't care. They just want his Bitcoin. He has amassed a lot of Bitcoin. It's obvious what level it has to be above before he gets liquidated. So he's a target for all. And I believe the whales are. I believe that's the battle happening right here. I believe the whales want that Bitcoin, and as soon as that guy's liquidated, then they'll watch. Amazingly, the crypto market gets stabilized and goes back. Like I think that's what the game is happening here, and I believe that's what this chart is telling us could be on the horizon. But make no mistake, if this low breaks at 229, it's game over technically. Like I mean, we do these charts all the time. This thing's toast. Now it could still push higher in the connector, but there's no reason to think it would, given what I've shown you on my other charts. So anyway, but will be volatile, sure, it always is. Uh, so again, you're gonna have to. I know everyone wants to buy crypto so bad. They bought all up here, and they're all being blown up now. You had all these dudes on the internet slamming, "Oh, it's going up," and now all they did was buy at the top of a bear flag, and it's breaking down. So you can't buy anything with crypto until you're down here. You just can't. So the question is, how does Solana go? Solana also hit the short area to the penny and got rejected. So the market's behaving very technically to the bearish side. Everything has happened as expected in crypto, bearish, not bullish, bearish. It's all like this is a technical reaction that I wanted from a bearish, and it's happening. So where could Solana go? Probably $90, $80, somewhere around there. And my thinking with GSOL is you still got this kind of like whipsaw type thing. A 4, a 5, an a B that could last a while, and some kind of C, something like this. This is what I'm thinking. Now, I could maybe force it. Maybe we could do something like this. Let's look at the RSI and see if it's just a shallow bounce. Yeah, see? Look at that bounce and the pathetic price action. So I hope you have not hold through this. Like, you do not want to be long this. This is telling you this is all the bounce you got for this whole. So that should tell you all you need. How low it's going to go, God knows. God knows. I mean, it's going to be probably trading below NAV and probably $5, somewhere around there, my guess. All right. And then BCHG, I'm amazed it's holding up. It is insane. It's holding up. But I mean, I think the writing's on the wall. It's going to break, right? But yeah, I mean, it's got to hold. I mean, it's got to hold this low. It just has to. If it doesn't, then this was a connector, right? And then we know our next target would be much lower, right? It would be we would come back down to this like single digit area, maybe even under $1. So I think it's last stand, but it's probably not going to make it given where we are with crypto, right? And Bitcoin Cash also very technical, behaving very technically. We want Bitcoin Cash here, and we need to break 271 with a ratio of divergence, and then that major low is in, major low. So we just have to wait and be patient. Yeah, we just have to wait. Okay. Anyway, I wish I had more happy talk news for crypto traders, but no happy talk from me on crypto right now. I'm just telling you how it is. Litecoin again, one more push lower. I want to see the $60 area hit, and or once we break this low, it can end at any moment too. By the way, okay. Bitcoin, look, I have a big drop here, but we only have one more swing lower. It could truncate. I could be wrong. It could truncate. As long as we break this low and erase divergence, it could truncate. Okay, just like this. Now the worst case scenario is I put an X here and I put this make this an ABC, and this is a 1, 2, 3, 4, 5. If this is an ABC, well then you would definitely hit these targets, and then we may not be bearish enough on our altcoins. So I think I don't want to do that just yet. But right now, Litecoin, I have a down in this area somewhere. So LTCN, see how it bounced here? We're in Y, so it looks like we've got the first A wave done, or three wave move. So we have a three wave move done, and so we need another swing lower. So we need another swing lower. I bet it's coming down to this $4 area. Whoops. Something like that. Yeah, I bet it's coming down to this $4, $4.85 area. Okay. Let me see. Please, if small energy might go upward. Okay, sure. TPET, let's take a look. Yeah, you guys got to bring me some small energy plays because I can't look them all up either, you know. So TPET got this big pump. Looks like 5 off that low, right? So that's a good sign. That's a 1-2-1-2 setup. I'll zoom back out in a minute. So you have like a 1-2-1-2 setup here. Didn't have an ideal bottom here. Um, that looks like 3. So it looks like it's going to do like a whipsaw price action off of this peak. Let's see. Let's look. We're gonna have to start from a higher time frame. Yeah. So that capitulated in 3 here. 1, 2, 3 connector. 1, 2, 3 connector. So you had a WXY here, and now you're in Y, and you bottomed out right there on Y. Major low. That's why you got that reaction. A, B, C. So yeah, as long as you're from this low, we want to just assume a new bull market is trying to get started, or a bigger bounce, whether it's a bull market or not. And it looks like to me you've got some kind of impulse here and here. So as long as you're above 109, it should continue higher. And this looks like an impulse, right? See? Out. So that's what it looks like to me. So again, looks pretty bullish. Very, it's a single digit stock. I don't know what if this company even exists, but there it is. Well, I don't know where they are in the world or what they do. So there you go. There you go. And we'll add that to our watch list. We'll add that to our watch list. Okay, good. Thanks for bringing that up. Yeah, I mean, if the market breeds lower, I mean, just think about it. Not everybody's going to be able to pay the higher interest rates and the higher commodity cost and tariff cost. They're just going to fold. They're just going to go bankrupt, man. Yeah. Lunar is to me like devil's fruit. It's like tempting, but I would try to avoid it uh, because the corrective structure looks like three waves here with that big drop. So I think you got to call it what it is. I think you got to call it what it is. It's a corrective move off the low, which means it could come back and break these lows. And we tried to buy the continuation, and then stopped out essentially here. So I think there's no reason to trade it. I don't know what happened. Like there must have been some massive news event, but that's three down. So maybe, just maybe, this could hold and it could whipsaw back up. But my guess is it's going to make an impulse down. It's going to do something like this. Rally, and then just keep going down. Because it's only three. We never made that four wave, and this is way too severe. So this is just probably, these lows are probably going to get broken. But it looks like you'll make a five and come out. MNDY Monday. Let's take a look at Monday. Looks like we had this labeled 3, 4, 5, and it continued to extend. We took the high out. Look at that. Look at that. So it's going to go higher. C is going to go higher. Took the high out, and that can happen, right? That could always happen. So now you have a 1, 2. So now you're in 2. So you're in 2. If you're in a flat, it's going to come back to 160, but it should be supported. Looking at it, yeah, that's 5. You'd have to label it this way. I think this is how you have to label it. And then this is just probably not enough data. That's 3 waves. It's obviously 3 waves. So 3, 3, 3. So we're going to have to look at it as a complex correction. So some kind of 3-wave move for A, B, C. I'm probably looking at a flat. And then 1, 2, 3 down again. I bet you're still in B. I wonder if it's going to do like a triangle here. It may do like a triangle like this. Go lower. So real funky like correction, but I can't. This is too hard to predict. But because it broke the high, it should, whatever happens here, it should come out for another more upside in the future. And now you have to start thinking that maybe this was a major low. And that's why we, you just trade the levels. So I think we just have to monitor this correction. It's only in 3 and 3, so it could turn into a triangle. It may not be a flat. So we'll leave it unlabeled, but I believe, this will resolve higher. MDB. So MDB broke our bullish setup, right? So we had this two, we had five up. Now this low had to hold, and sure enough, it gapped below it. So now this is a broken chart, right? We're in a bigger correction, right? So now we have a much bigger problem on our hands if you're an investor, because now you have a bigger correction. So this is the battlegrounds, and the bulls weren't able to succeed. And it's moving in three waves. So our next target is going to be at 57.97, a retest of the all-time low. Wow, some of these stocks just getting obliterated. Um, just getting obliterated. It's sad that some of these companies just aren't able to figure this AI or benefit from it, and then manage their expenses through this high inflationary period. And maybe tariffs are gonna really nail these guys, or who knows. But that's the chart. Unfortunately, I would be shorting this on every three wave pop. Every time it goes up in three waves, you could try to short it. All right, FAZ is the bank short play, right? Yeah. We need to look at the XLF and see what that's doing. What's my count on the? I was just playing around with this the other day. Oh man, yeah, I should see. I was playing around with this. I was like, I wonder if it'll do a flat, and sure enough, looks like that's what it did here. So the $1 million question is: this another 1-2, and we're going to hit this $7 area? I bet we're going to do that. I bet it's going to do this. Let's look at the XLF real quick. Yeah, we have a major top and a three. This is likely to make one more leg lower. So yeah, it's likely so the FAZ. So FAZ is good as long as the XLF stays below 50.94. I would be okay. Now once the XLF gets to 45, 46, $44, then it's a lot more dangerous to own the FAZ. FAZ. But I'm looking. This is the count in the financials that I have. Probably benefiting from the higher interest rates. When this peaks, more than likely you'll get the massive financial crisis. Everything. The grand supercycle should crash here. Now, if this is a 2, then it could go deeper, though. That's the only thing. We don't know. But if you look at this chart, I have it as like a 1-2, 1-2, 3, 4, 3. So I mean, it's definitely topping out, and then there'll be a catastrophe, a financial crisis like 2009, right? And that's probably coincides with the peak of the whole grand super cycle, which I still don't think we are in the Dow index, because certain sectors are going to do okay. Tech is in a rotation play, right? Tech's in a rotation play. Like, look what happened in 2000, guys. Look, 2000, the dot-com bubble burst. But look what the financials did. Oh, shit. Look at that. Fuck, I should have been in financials. The tech index was down at the lows the whole time. The same thing is probably going to happen here. Tech is going to burst. This will go down, sure. But this will make new highs, just like we saw before, and tech's going to be sucking the wind, and then this will crash like it did in 2009. It's the same kind of theme, the same kind of end game. We'll probably see the same kind of end game in the financials, right? So FAZ is like this. I'll be surprised if it's the end of the grand supercycle in financials, where some people believe, which I guess if that's the count, you would have to go with maybe like a 1, 2, 3, 4, 5. Make this a 3, 4. But you see how we took the divergence out there on the weekly? It's odds are that's not a, see, that's why I don't have that count. All right, something like that. But I believe it could go lower. I believe it could go lower. There's a 618 right there. That'd be perfect. And that brings the Dow to end the Dow's correction, right? That probably ends the Dow's correction. So that's probably what I'm thinking right now, something like that. All right, SMCI, yeah, how's that one doing? How's that one doing? Looks like our short box got nailed. We had the 2, I think this was our last update, and it broke the low. So don't say I didn't warn you guys. If you're playing around, I still see all these call boys on the internet buying SMCI calls out of the money. Yes, I'm like just playing, just maybe lighting money on fire, but just keep going. I think that's the chart pattern. I don't know. More than likely, this ends with it going to 0. You waking up one day and it's like an not trading, like a Lehman type situation, or like something like that. Like essentially, you lose all your money. Go home, game over. That's what this chart is telling me. So every night you hold it could be the night where your luck runs out at the casino if you're long. And short, I don't even know what happens when you're short. That's like, how do you buy shares if the stock doesn't trade for some? Like, I don't even know how do you recover in that situation. Like, but anyway, I'm very bearish on this chart. Okay, very bearish. But a lot of people are still so bullish on it. I don't understand. But anyway, we broke the low. That definitely opens up more downside. Once you break this low, technically, the algos and computerized trading, they're just going to slam this thing down. And then by then, some news event will come out and go, oh my God, that we thought we had all this cash and we don't. Our bad. We're out of business, or there was this fraud or some whistleblower comes out of nowhere, and we don't know. But I think this is the chart, and it looks like it's about to go into some kind of waterfall selling event of some kind, if this is the chart. And just understand where we are. It's very technical from an Elliott wave standpoint. Very technical. Okay, MSOS. Let's take a look here. We're calling the end of the cycle. So I'm out of, I counted all the waves to the very end, and that's it. So as long as we're above 240, we hope a new bull market gave birth to a new bull market. That's what we're hoping for. So we see all the divergence to 5 of 5 of 5 of 5. I mean, it all works good. Now, if we break out this, well, then this is all another 1, 2, and it's just going to go down to the low $1. So it's got to hold 239. It should come out of a new bull market. UVIX is another one that mentioned on our video last week. We were watching this on a end of the day update. We saw the cycle end, and I said, hey, we had the count literally end, and I'm like, hey, the cycle's over. So theoretically, the UVIX should go higher. And look, oh my gosh, shocker, it went higher. So now where can it go? I think it comes back to 46 in this area and a big test. It's a big test here because either it's going to do this, and that will be the whipsaw in the indices. If it does that, then you're going to get the flat in the indices. You're going to get this flat. You're going to get a you're going to get that, right? You're going to get destroyed in a flat. That's what that count is. But the other count is we break through this, which would pretty much take out this high. And once that high's out, the skies, you just use your imagination. You can go dream about how much money, because God knows, I don't know how high, but that would open us up for a potential market crash, limit down situation. So I think this is the likely spot it runs into a lot of trouble. It's going to have to get through this. If it can get through this, then I mean, who knows? I don't even know. I think it could go much higher than people really understand. But I do think if it gets rejected, it could take a whole nother leg lower down to $22, and the market could have that face ripper whipsaw, and that's why you can't short in the hole. And that's what it did in 2022 to all the people that did that. They got punished. So this will be a big test. But it still looks like it's not finished yet, not quite yet. You know, so we'll see. This seems like the logical area for it to go to, but it shouldn't make it in 5. You need it in 3. So maybe it could just finish it up early next week, or it makes 5. It does something like this and pulls back and then does that, finishes up. So it could do that too. Okay, Indo is technically just, again, people are emailing me, it's not moving, and they're upset. And I'm like, dude, you got to be patient with these trades, and nothing's guaranteed. Like these lows could break, and it will go lower. So, but right now the count is a left shoulder, a head, and a right shoulder, and then a breakout. So this is the count. Energy is on the opposite edge of the cliff. They're not on the edge of the cliff. They're ready to go into paradise. Energy is ready to break out. Every energy chart looks like this, essentially, ready to explode out. Could it be wrong and just get? It could. We could. So you don't put your whole stack in. You know these are the levels. It has to hold. It hit this level. It bounced. Okay, it double corrected. It hit the level again. It bounced. Now it's finding support. Good. Now it needs to hold these levels. If it doesn't, it will just it will just make a bigger correction, and maybe it'll bounce again. It'll go down to 259, and we'll just bounce again, and then the two will just, you get the idea. It needs to hold this low, this 250. That's the low it's got to hold. But it's already broken out of the downtrend, so it's just, we'll have to wait and see. 350, 360, then it could make another big consolidation and then really get going. All right, ATKR. All right, so see how we made this 5th wave and then it failed. So that means the flat is extending lower. And that's what flats do. And that's why a lot of traders have a hard time with them. So it looks like it's another 1, 2. And we're going lower in 3 to push the flat even lower. We'll want to erase that divergence. It probably will do that soon. If it has, yeah, well, so it's likely to continue much lower. I wouldn't say much lower, but definitely lower. And you can see the count. Yeah, it's still in another. I don't think it's seen the really big sell-off yet, believe it or not. The capitulation sell-off. So you'll have to just expect it to go lower. So again, that pivot broke. It's going to open up more downside. You have no chart support here, so you'll probably end up down at like $28 when it's all said and done. And then BNTX. Oh, biotech. Yeah, how's that one doing? I had 5 waves down and we're coming out of a connector. Now is the connector finished? Very bearish if it is. That would essentially be a go to zero play. Again, vaccine makers aren't really the most popular companies right now, especially with the administration that we've got in the U.S. I think it's likely that the connector's done there. And you have 5 down, 3 up. So yeah, that one looks like it's heading lower already. And C. And again, just it's tough to say where it will end up, but odds are it's probably going lower. And it's going to break these lows. Chart support, we don't really have a lot. So it's tough to say where it goes. What you'll need is the race divergence. So it would have to come down and take this peak out, and then you'll have to see something like 5 waves, and then perhaps you could try to bottom fish it potentially. Could see $62 in this area when that is all said and done. So it would be somewhere around here, somewhere in this area. Yeah, maybe $56. Something like that. All right, good luck on that. Yeah, GME just got obliterated. It's likely that it's in that bigger corrective pattern, because that just doesn't happen technically unless it's in the bigger corrective pattern. And also GME is a lesson into why you don't chase trades. Anything can happen at any moment. You manage your risk. You just never know what can happen. Everyone that was in my pro group didn't actually lose money if they traded the way I had suggested. Again, you can always trade and do what's best for you, but if you did it and managed the trade properly, everyone left with a profit, even after the calamity that happened the day before. People that didn't and chased, they blew their accounts up, and that's sad, but it's a lesson learned. See GME, so good. Someone's asking about GME, so we can just jump to that one again here and take a look at it. So GME, right now I'm still optimistic. I'm still keeping this bullish count intact. I'm letting the market change my mind. If it is, it's a 3-wave move in a WXY pattern here, right? This is a connector that we would expect it to bounce more. We need to get, if this is the count, we wanted to see it rebound, rally pretty high and fail like that. That's what you want to see for this setup. Now, if we just continue lower, then we have to take this more bearish view of GME. And we have to say we're still in this too, and we're in the bigger corrective structure like this. And this was a massive triangle. It was just a big triangle that finished up here, and then it just is going to drop in Y. And that target, we can try to get a target from there, but as you can see, it's essentially a retest of the lows, right? It's a retest of the lows, and then this would need 3 swings, right? It would need 3 swings, so it needs something like that. And we'd want to impulse down. So it's one or the other. I'd recommend being on the sidelines, and let's get some more data before we start to do anything with GME. If you happen to get trapped, as you happen to chase it, I'm saying you, but you out there that are listening to me, if you were one of the ones that, if you got trapped chasing it, well, just understand there's no guarantee it could continue higher. Like I showed, it could go all the way down there. Now, what I'm trying to tell you guys is we had to buy here, literally here on these lows, and we held through it. Then at 25, I demanded people are encouraged to take some profit. That was our target originally, and if they did that, then no matter what happened here, they would have put their stop here. They would have been okay. They would have got out with essentially with profit, no loss. Some people that followed me actually were smart enough and they got out at the top. They understood what was happening and they got out at the top from this low. They made a massive amount of money and they traded it like a pro. But some people, unfortunately, chased this and they blew their account up. And this is a learning that shit can happen in the market, which is why my system doesn't allow us to chase. And some people hate that because they want to trade so much or they see the price move. But this prevents days like the tragedy, like what happened on Thursday from happening to your account. Because once in a while, your luck can turn at the casino at any moment. Like I always say, your luck can change at any moment. You could lose everything. You could wake up when you trade an individual stock. You could always wake up. It's never a zero possibility that your stock won't go to zero overnight. There's always fraud. There's always weird shit that happens, and there's a one in it. Yeah, it's a one in a million, but there is a million. I mean, so there's always a small single stock risk. So you always have to manage your risk and understand that you're always taking something off the table. You're never just keeping all in because you just never know that you wake up and you're like something like this happens. So it's a kind of a lesson learned in how to manage a trade. I think that's what this is, a lesson learned in how to manage a trade. But for now, we'll just kind of stay optimistic. But I wouldn't be surprised if we're in a bigger two and we got to wait a little bit longer. Bitcoin. So Bitcoin's, the bearish view is coming more and more into picture here. I did point out this bear flag to our members, not to chase it, not to listen to internet chatter and all these proclamations of millions-dollar Bitcoin, people saying it's going to 500. I'm sure it will go there one day, but not right now. Not with these bearish structures here. We had this triangle, and I warned our followers about the triangle, and sure enough, it broke down literally the 24 hours after I posted the video about the triangle. It broke down. You could have used that information to short it. You would have made a ton of money. We also bought it here, and then I told our followers you need to try to sell something here just in case. And look, sure enough, we ended up breaking those lows. So people that would have bought it and didn't sell anything here, you would have actually lost money. Crazy as it sounds. So here you have a lower low sequence. It looks like you need another swing lower. Okay, no matter what happens here. So right now the count looks like 5 down, but we are trying to erase divergence. If we erase divergence, this will become another 1, 2, and then we probably will go into meltdown mode in Bitcoin, and a lot of trap buyers will be panicking, and they'll sell, and they'll push this bear flag to conclusion. And it will be a sad situation in crypto because a lot of people believed a lot of bad information on the internet or whoever, and they'll be blown up. And this is why I even started my channel in the first place, guys, to prevent tragedies like this. And I hope, again, I mean, it's looking like maybe there was still some hope it could break out of this and extend the connector, but I believe it seems to be fading away, and I would be careful hoping and buying the dip right now. Now, shorting it could be dangerous because it could retrace back up to 85.7, 86,000. Okay, so if this is a 5, it could retrace back up. So be careful about that. We'll just watch this play out. This is in 3. If it makes a bigger 3, maybe it could, like I said, the connector, and the problem with Bitcoin's connector wave, I show it like this, but the connector wave could last for 6-7 months. We saw that before, right? If you're new to trade in Bitcoin, we saw the biggest connector wave of them all. This, look how long this took before you got to capitulation. We could be in something like this, like where it lasts for a long time. So we could be stuck in this range, this trading range for a long time. So just understand, if you're looking, again, instant gratification, you may not find it right now as we are in a connector. So this connector could do the same thing as we saw in 2017 and just to meander all around here, down and up and down, like just who knows what it turns into, and then up capitulate. It could do that. So just because I show it doing this doesn't mean it's going to happen in this time frame. It could happen, but this connector could still go on for 7 months in this to God knows what it turned, a triangle, a even bigger triangle for all we know. So just understand that's why it's better to just be on the sidelines on Bitcoin right now. You'll get chopped up. You're going to get chopped up. Just wait for the capitulation move and don't get chopped up. If we get bigger confirmation of a breakout, then we'll look to get long. And you'll have plenty of time before it becomes $1 million Bitcoin. You won't miss the move. You won't care. You'll just be safer. So that's my advice, guys, on Bitcoin. Good luck on that. Oh, and Mike Blowen's bothering you. Yeah, I got to buy a new mic. I need to buy a new mic. So anyway, why does this seem like a lot of stocks are down tenfold compared to the indices? It's because of a market rotation going on. It's a market rotation going on. That's the reason why the indices are being supported, because the money's moving out to other stocks. It's not a complete wipeout, right? It's not a complete like 2009 where it was just cash. I think that day is coming, but there's a lot of stocks that aren't ready there's other stocks that are too over, that aren't going to do that, that are supporting the market. That's the reason why the headline indices are doing that. So, good, guys. Well, I appreciate everything. Thanks again. It looks like I covered everybody's chat here. And I just want to read through the comments one more time and go from there. DXYZ bottomed. I think as long as 24.93 holds, it's okay. So, all right. I think that's it, guys. Thanks again. Enjoy your weekend, and talk to you guys later. Thanks again.